Welcome to the new webinar series of the LPA, which will focus on new investment opportunities and also new business models. Today, we will have a strong interest for PropTech, and that's why we invited many guests, be it local or international ones. The first part will be to pass over to Laurent Rouache, who is the president of the Lux PropTech Association. Afterwards, Idris Gossens, who is also the founder of PropTech Lab in Belgium, but also organizer of the Relevation Conference, will give you a market update on PropTech and update you with some interesting numbers. Afterwards, we'll move on then to our panel with many guests here, and then we'll go through the different verticals, the business opportunities in the field, and also how resilient PropTech is, and also what kind of opportunities it could bring also on the table. As usual, you can interact with us via the Q&A and chat function. We will monitor those. And certainly, I will pass over now to Laurent from Lux PropTech. Hello, Laurent.
Hello, Stéphane. Thank you, Stéphane, for giving us the opportunity to introduce Lux PropTech to your community. Today, PropTech is a hot topic, and the success of Relevation Conference last year is meaningful. One can assess the power of an industry through its ability to adapt. The pandemic has heavily impacted the real estate industry, and the PropTech has not been spared. For instance, co-working firms has been dragged down, and the giant WeWork has closed some locations, for example. On the other hand, it's a change of era for the real estate brokers, thanks to PropTech, with virtual visits, digital platform for deals from the inception to the deed, remote signatures, even for the deed in Belgium or France. Other examples, the real estate funds feel today the urge to take good care of their tenants. Strong digital user experience is more and more required. Thanks to PropTech, they can provide this. Booking rooms and facilities, touchless equipment as voice control in lifts, interaction with environment and each other, building updates, dynamic parkings, etc. And investors are following, and investors are aware. Yesterday, we have shared on our LinkedIn page the main outcome of the Metaprop Global Confidence Index. Metaprop is a well-known VC also in this field. And this confidence hits a new record at 9.2 out of 10 against 7.7 in traditional startups. It's largely due to accelerated tech adoption during the pandemic. If we focus now on our country, as you know, real estate industry is the other pillar, with more than 10% of workforce involved in this field, and we have more than 80 PropTechs in Luxembourg, this tiny country. So last year we started to gather this ecosystem, and today we have 85 members with more than 56 PropTechs and corporates, sponsors, and more than 1,500 of followers on our LinkedIn page. We are really proud of that. And thanks to this corporate, we organize on a regular basis every 6 weeks event focused on a specific topic in PropTech field. We started with blockchain and real estate, what's up in Luxembourg. We have tools for promoters, tech and trends for real estate brokers. Last week we have construction technologies, and Caroline was there. You know, we have some robots on the work site here in Luxembourg. And the next one 21st of April, we will focus on smart and big data in real estate in Luxembourg. So thank you, Stéphane, to give us this opportunity to improve our visibility on this market. Thank you, Stéphane.
Thanks to you, Laurent, and it's a pleasure to host you today and certainly to partner further in the future. And also, what an impressive growth in just 1 year. Well done, guys. So now we will move on to Idris, who will give us then a quick market update on PropTech, because the question we are having here at the LPA is with the VC or investor angle. So what could be the opportunities for me to invest into such startup? And is it just about digitalization? Welcome, Idris.
Thank you. So I'll start, if you allow me, to share my screen. And I'll present just a couple of slides to kind of help you to deep dive into this PropTech planet, into this PropTech space. So maybe to start with a strong image, we think 2021 is the year of the bifurcation in real estate. So it means that we think there will be a rising gap between the real estate innovators on the right side and the real estate kind of non-innovators or the conservators on the left side. And so they will struggle more and more to keep up with the speed of the innovators. And so, of course, the purpose of today is to bring you in a journey on the right side of the screen, right? And so, just to make sure that we are on the same page, what is PropTech? The European definition is the following one. PropTech refers to any innovation. It can be technological, technical, or business model across the complete value chain of construction and real estate, and across all the real estate asset classes, not only office and residential, but healthcare, logistics, hospitality, retail, etc., right? So it's very broad, and in fact, it represents 3,000 PropTech startups. It's that broad that it's in fact subdivided in 5 different categories covering the life cycle of construction and real estate. And we have Caroline, the founder of SmartBeam, which is present today here. And what is very interesting, and Laurent already mentioned it, is that COVID-19 really tremendously accelerated the impact, accelerated the adoption of PropTech, right? So we see on this graph the pre-COVID-19 activity of something like 37 PropTech teams. So was it high or low? And then what was the COVID-19 impact on these topics? Was it decelerating or accelerating? And we see that it was tremendously, largely accelerated by COVID-19. But this being said, just to really understand the bigger picture, why is PropTech booming? I'd like to remind you that there are a couple of long-term trends, macroeconomical trends, that are shaping the margins of construction and the return on investments on real estate. So you could think of topics like energy and climate change, the aging of population and need for adapted infrastructures, etc., etc. And on top of this, we see new technologies appearing and changing the nature of work for construction and real estate professionals. So it means that they must have new skills in-house to be able to adopt these solutions. But we know that construction and real estate remains largely undigitized. According to McKinsey, there is only hunting and agriculture, which is even less digitized, right? And finally, on top of this, we are in a fast-changing environment. So it means that there are lots of new players appearing and taking almost overnight a lot of market shares. So last year, we were monitoring 37 PropTech unicorns, and the majority of them didn't exist 10 years ago, right? And we also see that the tech giants are more and more investigating and sometimes investing in PropTech as well. So it means that the domain of expertise of construction and real estate professionals is not protecting us from competition anymore. But that being said, you shouldn't analyze the momentum of PropTech as a one-time event. It's not like a tsunami. It's rather like a global warming. And this picture is full of hope here because you have the tsunami and the global warming in the same picture. But the idea is that the consolidation of PropTech will rather happen gradually, tech by tech, core business by core business, architects, engineer, general contractor, subcontractor, etc., and as well asset class by asset class, logistics, retail, healthcare, hospitality, etc. So it's really more gradual. And when someone asks me, but why should we really innovate? Why should innovation be a top priority in construction and real estate? I answer, look, because we don't want to be the T-Rex. The T-Rex was the top of the food chain, but was not able to adapt in a fast-changing environment. It didn't have an agility strategy, and so it basically disappeared. And we think now a lot of construction and real estate corporations are in the position of the T-Rex. But that being said, we are in a very rich environment. We are lucky because Europe is the richest PropTech environment. There are 3,000 PropTech startups in Europe compared to something like 2,000 in the US as a benchmark. And if you agree with the distribution of the 5 categories I presented before, this is here how are located the 3,000 PropTech startups. So we see that the majority are in manage and operate and market and transact. And we also see that the ecosystem is relatively young because 59% of all the PropTech startups in Europe have less than 10 FTEs, full-time equivalents, right? So it's still early. And this being said, from a VC point of view, we see that globally, PropTech has a delay of 2 years compared to FinTech. And we also see that the total amounts that were that was invested in Europe represents 8% on average year on year on the total amounts that was invested in PropTech globally. And so we calculated that something like $83 billion were invested in PropTech so far since the beginning of the PropTech movement, and there is still something like 165 million to be deployed in the PropTech space before the consolidation of the market. And to end up maybe more concretely on the European PropTech ecosystem, so we see that the volumes of capital deployed in the PropTech space in Europe is really doubling every single year since 2018. 1.53 billion was invested in 18, 3 billion in 19, and then of course big drop to 1.2 billion in 2020 due to the pandemic. But 2021 is already record-breaking because it started very strong, and we saw that COVID-19 had a positive impact on PropTech. It's maybe the only positive impact of COVID-19 actually in PropTech, right? And so this being said, we have as well a very vibrant ecosystem of VCs, and I'm very happy to have Gregory as well involved today as the founder of EO PropTech, the largest European PropTech VC. I also couldn't stop the introduction without mentioning that we are organizing Relevation in that general framework of with the ambition of connecting PropTech startups and large VCs. So Relevation is a completely digital fundraising summit for PropTech. So it's what we call a transactional event. So it's not an educational event, it's not a webinar. It's really an event where we want to do proactive matchmakings and really help investors closing deals, help startups raising capital. And we as well offer a world-class content of program. And obviously LPEA is a proud partner in the event. So it's a top league event. It will be 23rd and 24th of June. And as well, for the first time, we invite LPs to join the event because there are currently a lot of PropTech startups, a lot of PropTech funds raising capital. So we wanted to have value for them sourcing startups, but as well easing access to capital. So the content of program will look like this. We have basically created 4 different experiences: the main stage, where we will have the most generalistic topics, the village conference, where we will deep dive into more specific topics for more targeted audience, the networking, which is the most important part. We want to generate at least 1,200 meetings this year, and then the side events, which are closed door sessions on invitation only. So I will not have the time to go over the full content of program, but it's really the captains of industry in the world in that very niche market, which is investing in PropTech. So we are very proud of the content of the program, and we end up the 2-day session with the speed dating with high potentials, young graduates. So we basically partner up with Stanford University, Oxford University, Yale University, and many other business schools to allow them to invite for free their high potentials, young graduates. So this is the distribution of all the partners today, and obviously LPEA is among them. So thank you again for this opportunity. And now let's jump into the core topic, which is the panel conversation.
Thanks a lot, Idris, for this snapshot and also for setting the scene. We are gladly participating to the Relevation conference, and also a quick call to all our favorite members. Should you want to join us in order to present Luxembourg and also the different structuring possibilities, that should be a win for sure. So now we will move on to the panel. You can also ask your questions, as we said before. And we will start for a quick intro round with ANO PropTech and Gregory. And then we will move on to 2B.lu with Alexander. We Invest Capital Partners with Philip, and certainly also SmartBeam with Caroline. Gregory?
Thank you so much. Nice to be here, and thanks for having me. So my name is Gregory. I'm the founder of Is Proptech. As Idris mentioned, we are a VC firm focusing on the transformation of the real estate industry. We're the largest PropTech investor in Europe. We're also have a very different approach to venture capital, especially for PropTech. A big portion of the funds that we've raised has come from very large real estate institutional investor who give us access to a big part of their portfolio so that we can test, pilot, and scale the portfolio companies that we invest in. Today, we have access to about $40 billion of assets in Europe that we use strategically to enable the accelerated growth of our portfolio companies. But also, it's a very important part of the underwriting that we do when we assess companies so that we can get feedback loop. We are a team that's very much centered on data as well. We have a chief data officer. We have a digital transformation team that enables us to comprehend and enable the transformation of the industry. Our mission is really to transform real estate into a more digital, efficient, and accessible asset class by applying innovative technologies and business model. And our broader vision is to improve quality of life, accelerate sustainable living, and enable the decarbonization of the largest asset class in the world. We invest in Europe and in the US predominantly with a stage agnostic approach from broadly Series A onwards. Thank you.
Thank you, Gregory, for sharing. Alexander.
Thank you very much, Stefan, for giving a stage. My name is Alexander Tkachenko. I'm founder and general partner of 2BLU Investments. It's an early stage fund, so we invest very early on, pre-seed, seed, post-seed, and A rounds. We have been investing in PropTech since 2016. We had 3 investments, one of which we just exited at the beginning of this year. The focus of the fund was on the platforms, and therefore this was the angle that we were looking and still are looking in PropTech. Although our focus is shifting a little bit and we're looking more and more for the data management and process automation companies. We invest mainly in Europe, UK, Southeast Asia, and we're looking to bring companies outside of Europe to Europe and help them scale here. And we're one of the, I guess, few funds in Luxembourg that are actively looking at the space and helping to grow the ecosystem here. Thank you.
Good choice and welcome, Alexander. Philippe?
Hi, everyone. Thank you, everyone, for being there. I'm Philippe Barthélémy, so I'm the founding partner of one of the co-founding partner of Reinvest Capital Partners. I like this name because everyone is repeating, we invest every time. And so we are operating, you know, in 3 fields mainly today. One of them is real estate investment because we are running a real estate fund. Investing in a very niche segment of the premium location area. We are also deploying capital in private equity investment. We are some VC investors as well, but it's more, you know, confidential. And we are also providing third-party advisory services to help investors deploying capital throughout all our investment strategies. Thank you.
Welcome, Philippe. And last but not least, Caroline from SmartBeam.
Hi, everyone. Thank you very much for having me. So my name is Caroline Bazex. I'm the CEO and co-founder of SmartBeam. I have a background in construction engineering, and I've worked for the past for a construction group on big residential sites before discovering the world of software, working for a context startup in San Francisco. So I've experienced firsthand the problem of collaboration and budget management on construction sites, and also on the other hand, the impact that digital transformation could have on profit, efficiency, and also on people's well-being. So that's what inspired me to found SmartBeam with my 2 co-founders in 2018. So today we are building budget management solutions that helps project stakeholders to collaborate in real time on a single platform. So our goal is really to bridge the gap between field and office by replacing chaotic spreadsheet and paper with streamlined financial workflow. So today our clients are basically owners, contractors, and project management companies, and we are active in Belgium, France, and Luxembourg. So in terms of investment, since today's topic, we have raised 1 million with first convertible loans, and afterward in seed funding with business angels specialized in B2B SaaS and also real estate, and as well as with Somrinvest, which is a public investors. So yeah, I'm very happy to share my experience here on PropTech and investment as a startup among all those great panelists.
Thanks. And with this diverse panel, it will be a real pleasure because we have then the investors, we have the startup, and we have also then the real estate specialists. So that should be a good and robust program. So as highlighted by Idris before, so COVID-19 had an impact on PropTech, seems very positive, that I'm very happy of. So could you please share with us if then there was an accelerated growth from your perspective, and also what about the demands? Who wants to start?
I can start, Idris, whatever. So if we take a look at the PropTech sector, a recent study from McKinsey shows that in a matter of 8 weeks, we took a leap forward of 5 years in the digital adoption. And so we see that many real estate developers and contractors are realizing that paper is no longer an option. And so we've seen all the invoicing process that was completely paper-based, getting fully digitized, first through emails, and now we are really helping them to be even more efficient with SmartBeam. But also we see many superintendents that before relied on physical meetings with a subcontractor to validate progress, such state progress change orders, but now they need to collaborate differently on a virtual workspace where decision can be traced. So really see a higher demand for digital tools. And from a more business perspective, our sales process is way more efficient now and has dropped our customer cost of acquisition since online meetings are now very well accepted in this industry, where before we had to physically go on one-to-one meeting all over Belgium, which was of course more costly. So.
Thank you, Caroline.
So if I may continue, Caroline, I fully agree with your point of view, because we are at Reinvest investing in Europe and more widely in the US as well. And for us, the COVID-19 situation was an issue because we were not able to travel anymore. And so we had a very tricky question that was how to remove the barriers because we needed to be hands-on with our investment project. And we have taken this opportunity with COVID-19 to deploy some, PropTech technologies and to enable that enable us to follow up on our ongoing works. And it was really an opportunity for us to discover new fields of opportunities and to strengthen our processes, both in investing and in following our investments. It was really something really interesting to see that there are a lot of solutions in the world of PropTechs to enable asset managers and investors to take the advantage of the technologies at that time. So it's really amazing what is happening now.
Great, thank you, Philippe. Anybody else wanted just to share a few ideas or how they have experienced that period?
I will just say one comment, which is really to summarize it all. I think what the pandemic has done is exposed the shortcomings of the industry in a big way, and it's positioned technology not as a nice to have anymore, but as a must have. There is no way out of the pandemic issues other than adopting technology. It's as simple as that. There's no argument about it. It's either you embrace it and you will end up thriving, or you don't, and you will become obsolete as a real estate company. I mean, for me, it's as clear as that.
Couldn't agree more.
And the same also applies then to more traditional private equity and our industry, where then our GPs, LPs had to adapt to new processes and also to do some external due diligence, use the different tools, which then made everything possible. So also huge acceleration there. Okay, great. We assume, and that was also mentioned before by Laurent, that subsectors like on business models, like for example, co-working spaces or co-living have probably suffered during the pandemic. Are these business models still an interesting investment? Could they also, in this highly digitalized world, and could they also find a kind of J-curve also in their development? What about that situation?
I'm happy to take the lead there. Basically, the question you ask is also the question of the impact of COVID-19 on the sharing economy in general, right? So it's co-living, co-working, but anything which is shared at the end of the day. And so I think if you analyze things in that angle, it's hard to have a clear-cut, to identify clear-cut trends, because I think it really depends on which asset class you speak about. Because, for instance, we saw that COVID-19 really had a super heavy negative impact on the co-working space. So Notel, for instance, went bankrupt. A lot of companies lose a lot of money. But I think this is just a short-term impact because in the future, companies will need more liquid offices. And there are a number of thought leaders, including Christian Grelier, the former VP Innovation of Bouygues Immobilier, for instance, in France. He's saying that the office of tomorrow is composed by 3 buckets. It's really an entity composed by three different segments, right? You have first headquarter, second co-working, and third home working. And the office of tomorrow is really the 3 combined. And so I think in the future, the demand for co-working will really, really increase. But if you analyze co-living, the impact of COVID-19 on co-living was very positive and on the really short term. So the founder of EcoHub, which is the largest co-living operator in Belgium, they told us that actually after the first lockdown, they received a big increase of the demand, because a lot of people who suffered during the first lockdown didn't want to live alone anymore ever, right? So it really increased the feeling of the necessity of belonging to a community. And if we analyze alternative sharing economy asset classes, for instance, the ghost kitchens or cloud kitchens, or we could even call it co-cooking, it has COVID-19 also had a very positive impact. So, you know, restaurants typically are 20% of the square meters for a kitchen, 80% of the square meters for the eating room. And so ghost kitchen is a new asset class using only 100% of the square meters for kitchens and then delivering all the meals digitally. And since restaurants were closed, they really saw an increase of something like 300%. And so again, this is an example of very positive impact of COVID-19 on sharing economy. So it's hard to have a black and white answer for me on that one.
Okay, that's great, because that shows also how subtle the whole sector is, and also how resilient. And we completely understand. And in such times, the solitude could be combated thanks to, for example, co-living, because even in this very highly digitalized world, it's very important to have also this human exchange, for sure.
If I can just add something to what you were saying, about co-living and co-working, it's true that we see that in large city center, they have really suffered from a lot from the lockdown, because people, of course, are working from home. But we also see that the combination of co-working and co-living in abroad, in natural or exotic places or lifestyle cities have really been exploding. There are more and more digital nomads and remote workers that are working, that are actually looking for better life quality far from their hometown. And there are many co-livings like Startup Basecamp or Outside that have been really betting on remote working. That was before a niche, and now it has been like, it has skyrocketed completely with the COVID, and is really likely to be maintained higher than the pre-crisis level, since companies are finally getting that employees can still be efficient far from home office, and for less infrastructure cost, actually.
Thank you, Caroline.
I'd love to make a quick comment just for people in the audience that are also discovering, PropTech and trying to make sense of all its components. What I'd like to say is it's very important to differentiate what are pure play technology business models and what is not. So businesses like WeWork or Notel are not tech businesses. They are operating businesses that are in some way leveraging community and some aspects of technology. They have never been, and they never will be in the way they are today, technology businesses. And that's one of the big misconceptions that the market had, which created, some of the downfalls that we're all aware of. Is they should have never traded at the valuation they did because they were never technology companies. They were just improved operating business models. And so I think it's very important for the audience to understand and differentiate what is technology and what it isn't.
Thank you, Gregory. And it's an excellent transition then to our next question. Since we understood that digitalization is certainly core to PropTech, what are a little bit the hot trends you're currently monitoring? And which technologies could become real game changers?
Sure. So what I'll say is I think I'll answer this in the following way. Taking a step back, the way we look at the technology and real estate ecosystem is that the notion of what value add is in real estate has changed, and today is a factor of technology. You will have technologies that will enable you to improve your operational margins, and that's something that's very important in a world where real estate is trading at very low yields effectively. So every euro that you can save in your operational cost will go a long way into creating asset appreciation. There are technologies that will, on the other hand, enable you to improve your revenue growth, either by improving your rental growth by understanding your customers better, servicing them better, and reducing churn and basically turnover, but also leveraging the positioning as a landlord to act as a platform and create additional revenue opportunities through ancillary services. And then the last thing is the theme around sustainability. So all those themes are basically present end to end in the entire life cycle of a real estate asset, whether it's from the design to the conception to the construction to the operation, the transaction, and the tenant engagement. So we see huge opportunities across, and effectively we are focusing on themes, problems, and solutions that are an absolute necessity in the construct of today's world. And that necessity is coming from what I see as the convergence of the three most important market forces in the industry. The first one is capital markets. So capital markets, i.e. equity investors or debt holders, are increasingly more demanding for large real estate institutions as to how are they leveraging technology to create more transparencies and more efficiencies, whether those efficiencies are financial or climate related. Then you have what I call now customer pressure. And I want to say that one of the biggest changes we've seen in real estate in the last few years is we've gone from a landlord-centric industry to a customer, i.e. the tenant-centric industry. And that completely changed the industry. Today, as a landlord, you have to service, you have to respond to the needs of your customers in a very meaningful way, in a much more agile way, in a much faster pace. Again, the only way to be able to do that is through the integration of technology in your day-to-day operation and in your system. And lastly, there is regulatory pressure from, especially in Europe now, around climate, principally around climate, which is forcing large landlords and large real estate companies to adopt technology in order to become compliant, in order to be able to respond to some of the net zero roadmaps that they're abiding to. And again, the only way to do that is to adopt technology. Now, the beauty of it is once you are forced to adopt technology for whatever the reason is, amongst those three reasons that I've mentioned, you are crossing a very important psychological threshold, which is as an industry that ignored technology for the last 50 years, suddenly you are forced to use it. If it works, you get the right momentum. And if you've adopted technology for one problem, you are very likely to start adopting technology across the board for other problems along the way. So I think what's happening right now is very critical in the evolution of the industry, because we are forced into technology, but it's here to stay, and it's going to basically create additional pace of adoption, usage. And we have today, thanks to amazing entrepreneurs and amazing technologies that are being developed, we are able to create a proper alignment of all the stakeholders, whether it's a financial element, it's an ESG alignment, and it's a customer first alignment. So I think it's very exciting. What we see as investors is that the market looks very, very different today than it did 2 years ago or 3 years ago. And it's only going in one direction. We speak to all the stakeholders very regularly. There's never, ever been a greater sense of urgency and excitement about the prospects of what technology is going to bring to the industry. So I'm very excited personally.
Thanks for sharing your insights, Greg.
If I can comment, maybe less helicopter view, micro level, but maybe more on the concrete example. On my side, what I think is, or what we see, is basically that at the end of the day, tech doesn't really matter, I would say. What really matters is the use case. For instance, we are using emails every day, and personally, I don't really know what is the tech behind emails, right? And so I think what really matters is the use case, so the pain points that are solved. And I completely agree with the helicopter view of Greg just before, saying that we think actually that the whole PropTech ecosystem is structured according to two main innovation drivers. First is customer centricity, so to help the sector to shift from an asset-based industry to a service-based industry, or to a product-centric approach to a customer-centric approach. It's really what Greg said. And second innovation driver for us is efficiency. It's how to optimize the tools, become digital native, tech-powered. But so more concretely, if you analyze the largest real estate asset classes, the first is residential, second is office. And so we basically identify 4 trends. The first in residential is the importance of services and communities. Square meters are not enough anymore. Second is the importance of the customer experience, or the user experience, as the main competition differentiator. So it's not the quality of the project, the price, the location that is the game changer, but really the quality of the user experience and the customer experience. Third trend is the mutualization of square meters. So for instance, Kevin Cardona, the Chief Innovation Officer of BNP Paribas Real Estate, is saying that there is no asset class anymore. There are just square meters that must have a different usage according to the needs of the end user at a specific time. The morning it can be a brunch bar, then it becomes a co-working space, then it becomes a restaurant, then it becomes a shared meeting room space, etc., etc. And finally, for residential, the conflict between the ownership and the right of usage, we think is a very hot topic. With the creation of new business models like rent-to-buy business models, for instance. And if we analyze office, we think it's the importance of service and communities again, importance of a very strong B2C branding, and we think that the value of the square meters is more and more depending on who is the operator, coming with a strong branding, strong network, etc. We think also that the future of office is a network of connected satellite offices. And finally, the office of tomorrow, the office that will be able to attract companies and end users. We think it's a place making you more productive and healthier. So that can be as well low-tech innovations. But that would be my concrete take on the question.
Great. And having then a macro layer and a micro one, that's really good. And
sorry, I wanted to add something to Idris's comments, because I fully agree on the fact that the sooner you integrate the technology within your business, the less painful it is for you to operate, and you are adapting on the flow, and you are taking the advantage of these new technologies. And this is what we experience at We Invest Capital Partners, as I said just before, because sometimes it's like regulations, It's like regulations. If you are waiting that the regulation is, so painful that at that time you have a big step change within your business, and you have to adapt yourself a lot. But if you take the advantage of adapting yourself very early in the adoption of the new regulation, you are having an advantage over the others. So you have also to think about your competitive advantage and what you can extract from the technology and how you can turn this into a competitive advantage to your business as well.
Thanks, Philippe, for completing the analysis. So that's also, we also like the concrete examples as highlighted by Idris. For example, as a private person, most of us probably experienced one or more real estate transactions in our lives, which could vary from okay-ish to relatively complex. Any concrete enhancements we could expect from PropTech there, for example, like the use of tokenization or specialized one-stop shop platforms or eventually smarter contracts. What about that?
Stefan, maybe I can come here. I represent an early stage fund, therefore building on what Gregory said there, I think we were one of the earliest starting to invest into the PropTech, and therefore some of the points that were discussed we've already kind of passed, being an early stage investor. Therefore, from what we are interested is already the next stage. So if client-centric kind of, or move to the client-centric was interesting, say 3-4 years ago with the development of the platforms, what is interesting, for example, for us today is data management, because once you've created the platforms that allow you to collaborate, you start to collect large amounts of data, and processing, analyzing the data and providing recommendations is something that is of the interest. That should make transactions in real estate easier, for example, by helping the operators to get the data, get analysis, etc., etc., etc. Speaking about tokenization, it's a very, very interesting subject. As you know, I've been in this space for the last 3 years. In 2018, I started and still run the asset-backed digital issuance and investment platform VNX. But particularly for real estate, I think there's a number of the hurdles to introduce this technology. I'm a big believer in it, but the hurdles that I see to introduce it to the real estate is threefold. One is the legal implications, i.e. we're still far in the development of defining the asset-backed tokens, transactions with asset-backed tokens, secondary markets, etc., etc. Two, it's a very nice concept having a particular square meter, for example, linked to a digital asset, a token. However, the still undecided question is the management of it, i.e. we have a collection of the tokens representing a particular building, but who decides on which management company is to be selected, for example, or the usage of the space, common areas, etc., etc. That is still to be kind of decided, and that is still, in my view, an area that does not help the development of this technology in real estate. And third is, of course, the adoption. Although currently there is much less skepticism in Europe, for example, to the digital assets and to cryptocurrencies, I must say, again, being quite a while in the space and watching the developments in Asia and in the United States, I must say that Europe is not the leader in the adoption of the technology. Therefore, even if we are to introduce the property-linked tokens or digital assets, I think the possibility to use them and to transfer from one to another is much less widespread than in other areas. Therefore, I do believe that there is a possibility to use it, but still it's probably mid to long term rather than short term. Short term, I would focus on some other technologies that would help transactions.
Yeah, thank you, Alex. And I will also react on that specific topic because we are, an early adopter of this tokenization technology, token technology. As you may know, we are one of the first investment fund, real estate investment fund that have tokenized their shares. And so we are thinking about tokenization both on the liability side and asset side. On the liability side, for us, we see the tokenization as an opportunity to make an asset which is illiquid, to make it liquid. And when you have a smart contract for owning an asset, and if you can organize the transactions on this smart contract, you create somewhere a kind of liquidity that you can control through the technology, through processes. So meaning that, when you are selling a share within a closed-end fund, for example, you need to make sure that AML KYC processes are done correctly and so on. So meaning that if you have the assistance of a technology solution to detect the perfect moment where this transaction is being done, you have an advantage to make this market more liquid. And you can also make sure that you are adapting and that you are, respecting the laws and regulations. And this is clearly an opportunity for any asset manager to take this advantage of the technology to detect this very specific moment of the transaction. This is on the liability side. And on the asset side, I have to say that we are working also a lot because it's the same story. It's the same story because when you have an asset which is tokenized, you have done the work once for all. And so you can take the advantage of having this smart contract, and if you want to sell the asset, it goes very, very faster, I would say, and your discussion is evolving. You don't think about the burden of the administrative task of transferring an asset. So maybe at some point the regulation will say, okay, you have to go to the notary and that's it. Okay, perfect. But at least your market is growing as well, because your potential buyer can be at any point of the world. If you want to sell an asset, we are investing in Miami in the US. If you want to sell a Miami asset to someone who is in Europe, it's easier that way. And you make sure that if you understand this tokenization process, you make sure that your buyer is confident with the transaction. So this is very interesting to follow on this kind of technologies as well. And we are working a lot on that also.
Thank you, Philippe. Looks very promising and eager to test that in the future too. Greg mentioned before also sustainability. So how important is it for PropTech? And what can PropTech concretely do in this field?
Sure, happy to take that one. I think it's important to situate also the conversation. I think that today still too many people don't know that real estate is the #1 culprit of carbon emission amongst all other industries. If you ran a survey, probably amongst the people looking or listening to us today, or just generally, you would see that people would put forward aviation or agriculture as the #1 contributor to climate change and carbon emission, when in fact they are a tiny fraction of what actually real estate is. I think real estate is about 40% of global greenhouse gas emissions globally. If you talk about aviation or agriculture, they're in the 4, 5, 6% of global emissions. So, they're not in the same league. Data centers on their own as much as aviation. So I think it's very important. And I think we're starting to see that the realization that the role real estate has to play in the overall fight against climate change. In December, we became the first venture capital firm to ever join the World Economic Forum as a global innovator. And that was important because it showed that important institutions like the World Economic Forum realized that they should not have any conversation about climate change without people from our industry. And I think what's important is to also categorize it. So obviously today, everyone gets excited about the idea that we can build differently with different materials, that the buildings of the future will be carbon neutral, using biodiversity, using new construction, robotics, new softwares, and new materials. But there's also a bunch of assets that are there. There's existing stock of assets that need and will need to be retrofitted. And it's going to be painful because it's not easy to retrofit old buildings or existing buildings. And so it's as important, if not more, to be able to fix the current stock of assets through different technologies that are either leveraging IoT or software or hardware that will enable to reduce the carbon footprint and leverage data in order to manage those buildings in a more efficient manner. And that will also go a long way. I think some of the technologies that we look at today can reduce the carbon footprint of a single building by anywhere between 20 to 30 or 40%, depending on exactly how they're positioned into the building. And so I think that's very important, that every owner of real estate, every tenant is actively pursuing that role. And today we see that with large corporations that are taking very aggressive stance on their road to carbon neutrality, their road to net zero. And that effectively also puts a lot of pressure on the large landlords, because if Microsoft or Google came to you to take a lease in one of your buildings, they will want to see that your building, the technologies that it leverages to achieve that net zero, are in line with their own roadmaps. If you are not able to deliver a building that's compliant with what your tenant aspires to, you will not be able to rent this space to those guys, and effectively will have an impact on the price that you're able to command for any space for rental. And so I think it's very important to understand what are the technologies available today, and it's really a matter of how much money and how much capex as a landlord you're willing to spend. There are lighter, different versions of what you can do to existing buildings. And then you have the whole construction technology, the whole construction side of the industry, which is obviously creating a lot of carbon inefficiencies that can be solved in enabling to build better, faster, and also to use different materials to solve also all the issues coming from the supply chain of materials, which is a big component of overall carbon footprint. And so, I think it's a very important topic that wasn't a topic even, or wasn't enough of a topic even 2 years ago. I think the pandemic has created a realization that we all need to do better. I think this idea that any institution, whether you're a corporate or an investor, to just focus on profitability is not good enough. It's not accepted anymore. We like to say that you have to do well by doing good. I think it's our role collectively as investors, operators, owners, etc., in the entire ecosystem of real estate, but corporates and business in general, to aim to achieve a lot more, to take ownership of those issues and to do our bit to fix them. And the good news, where we see also that that there's been a big acceleration, that today you can do those things, you can do good and also back viable business models that will create significant value over time. And I personally believe that the most successful companies over the next decades will be climate-related companies. The next $100 billion, $1 trillion companies will be climate-related. I have no doubt personally, whether they come from real estate, decarbonization or adjacent industry. I have no doubt that this is the single largest theme that's not only something that we all have to do and care about, but it's also something that will enable to create a lot of value, which was necessarily the case before. There was a lot of criticism that this is another fad, and we've spoken about solar in 2008. A lot of people got burned. This is very, 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 very different. And so again, we are as investors putting a huge focus on that, to back the game changers, to back the entrepreneurs that are going to enable us as a society to achieve this ambitious but yet extremely important. I mean, we don't have a choice, really, a goal to decarbonize our planet. So as far as we're concerned within PropTech has a leading role to play. It's an opportunity for all the stakeholders to take the lead and making a huge impact overall in this fight against climate change.
And if I also can comment on that.
Yeah, please, Caro. Please.
Yeah, it's very interesting, and it's true that more and more customers and also employees are really looking for for more sense and going towards sustainability. And today we see that SaaS company can really help contractors to save time and money that can actually be poured in finding construction techniques and materials to reduce waste, carbon print, and energy. And actually, one of the top causes for material waste, it's rework due to miscommunication, workers' mistakes, frequent design change errors, and also selecting lowest bidders. And I think that all those topics and problems can easily be solved with tech.
And also wanted to congratulate you for this very political but transparent message. It's not about blaming anybody or specific sector, but it's really to find interesting and constructive solutions in the future. Excellent. Now that brings us also then to the investors in this PropTech world. Who are actually those typical investors and what are they looking for? And could you also eventually underline their concrete expectations in the fields? Are they, for example, investing because of sustainability, as you highlighted? Could that be one of the angles? And finally, how easy is it to invest in the PropTech sector?
I'm happy to answer first with my ecosystem manager hat, if you want, because what we try to do is really do the trend, watch the trends and really research and document all this ecosystem. So if we analyze the volumes of capital that were invested in the European PropTech space during the past 3 years, so 2018 to 2020, it means that 4.65 billions were invested by something like 1,000 investors, actually 1,078 precisely, according to our numbers, to our data. And we see that first, the huge majority of investors are European-based. So 86% of the investors were based in Europe, 10% come from US, and 3% from Asia. And then we see that 60% of them are VCs, and the rest is spread with angels, 17%, accelerators, 9%, and then CVC and private equity. And so we think on our side, when we analyze this evolution, we think that the stake that is invested by corporates is very much increasing during the past few years, and we think it's due because they realize that they absolutely must innovate. They must catch this PropTech train in order not to disappear like the T-Rex. And one of the innovation strategy is to invest in PropTech. So either they invest directly in startups if they have the access to, and if it makes sense, if the startup is interested, or they invest in a PropTech fund, and then they will have access to the information, they will have access to the new business models, and they will eventually have the financial returns. But what we see is really that PropTech is becoming a more competitive ocean. I would say it's gradually becoming a red ocean for VCs because there are lots of new PropTech funds raising capital. And so I would also share that I think gradually founders are becoming more and more picky on who do they want as investor in their capital. So you must really think of what is the added value you have. How can you really help the startup growing? How can you help the investor, the founders, sorry, the management team of the startup? Because if you want if you see PropTech as an opportunity and you want really to enjoy the fruits of the PropTech, if it's just for the financial returns, maybe the best way is to be positioned as LP. If you want really to have an impact on the growth of the startups, then maybe you can position yourself directly as investor, but you must be aware that it's, I think, a more and more competitive landscape. So that would be maybe my take.
happy to jump in also. I think what we've witnessed, I think as Idris correctly said, I think again, 2-3 years ago, the vast majorities of LPs looking at PropTech fund were real estate owners who basically saw their investment into PropTech as two ways to make money from the investments themselves, but from the integrations of technologies into their assets. And I think what we see today is, I think PropTech is not niche anymore. I actually don't like when people say PropTech is niche, because I think what we've realized is two things. Number one is the single largest asset class in the world. It's over half of the world's assets. So by definition, it's not niche when we speak about real estate. Secondly, what we see now is we have an influx of large corporates, large family offices, and large pension institutional investors who are looking at PropTech as a asset class of its own, to which they need to have an allocation, because it's the last standing largest industry that still is yet to be disrupted by technology. And so the opportunity that it represents in itself is literally is a generational opportunity, and we are the early innings of a massive secular trend of adoption and of disruption, again, in over half of the world's assets. I think it's very important that people situate that. And so it's very interesting to see also that now a lot of impact-focused investors, ESG-focused investors, climate-focused investors are also now going into PropTech, because they see that as one of the most impactful way to tackle some of those issues that they care about, given the sheer size and the impact that the real estate industry has on climate and on other social issues. So we're seeing really PropTech becoming more and more mainstream, and we see that as a great opportunity for us as specialist investors. We see more and more of the corporates or real estate investors want to invest in direct into PropTech companies. I think a lot of them are realizing that it's an entirely different job to what they're supposed to do. You have so many opportunities that you have a very high level of curation. You need to be understanding the entire ecosystem before committing to any. And sometimes it's not necessarily the best thing is if a big strategic comes into a company, because it could reduce the opportunities to work with the competition. So what we see is having specialist investors, venture capital investors, is the best way for a corporate or LP to get the maximum exposure, the maximum diversification, and they can still be strategic. I mean, some of our LPs are very strategic in the companies that we back, but they're not investing in direct because they also know it's not their job. That's not what they're supposed to do. It's a whole other level of expertise. And in the end, what's great is in any given PropTech fund, you will have strategic investors, but you also have pure play financial investors. And actually the financial investors are benefiting from having also strategic as LPs, because they bring their portfolio or the access to their real estate portfolio. So again, there's a great alignment. So we expect to see more and more balanced LP composition in LP fund. We're going to be raising our next fund later this year, and we expect to have no more than 50% of real estate strategic in our next fund.
Thank you, Gregory. Anybody else?
And when
last comment?
I don't know, when you talk about the typical PropTech investors, so far we've been talking a lot of VCs, business angels, but from my point of view, I see also more and more real estate investors and developers wanting to invest in our company to diversify their portfolio investments, but also mostly to accelerate the development of a product that could that they could benefit from. So it kind of raised the question: should a startup have some of their clients as investors? I think there's really like pros and cons. The thing is that I feel that they are not only they already know about the business. So of course, for a startup, it's easier. You don't have to put time and effort to pitch to other investors, but also they have some first-hand experience of the real estate industry, and also they can have an important network of potential clients that could be a serious asset for the business. So, but also on the other hand, they may want to have some influence on the development of some features or to a specific need they would like to develop. And it could also be a no-go for others client that would not wish to have competitors investing in their solution that you're using. So I think there's pros and cons. I don't know what's your what are your thoughts on that?
I would like to add a comment, but maybe not answering directly to your question on my side, if I may. But I'm asking first the approval from Stefan, of course.
Good.
Yeah. Okay. So I would just like to add a bit on everything we have said so far, saying that we have seen different funds, and I'm not mentioning anyone, but we have seen a couple of funds who wanted to raise a PropTech funds. They reached their first closing, and then they want to have a hard cap and have a second closing, and then after they go to their LPs and they say, "Oh, we have a small problem. We realize that we will have a problem of deal flow, so we decide not to go for a second close." And so I think what is very important is to really study well the complete ecosystem and to really engage with a lot of players before wanting to play a role in the PropTech space. I think there is a lot of opportunities, but we must first make sure that we really understand the market. And the best way to dominate it might be to join events like Relevation.
Mm-hmm.
Excellent conclusion, Idris. And on our side, it was important really to highlight the different levels, stages, and perspectives then from all of you, dear panelists. Now is the time to ask your questions. We can take those via the chat function or Q&A button. If we have no questions, then I would like to thank all our panelists for really sharing these enlightening insights, for sharing with such a transparency also their, how could I say, business models, but also angles of how this business model and PropTech sector will grow in the future. We like really those enabling stories also, which will grow in the future. And also thanks a lot to you, the audience, for joining us today. As usual, the whole webinar has been recorded. You can watch it afterwards. And now I just wanted to highlight a few of the upcoming events on the LPA level. So tomorrow we will have the Luxembourg Private Equity Venture Capital Stories with hints from Astorg. We will have next week the job fair. So this is the first private equity venture capital job fair we are organizing as LPA. And we're also having then the next week, the special module of our training academy around private debt, and end of the month, then also an international webinar with our Swiss friends from SECA. So see you soon. Thanks a lot and stay tuned.